Well, hello, and you're listening to Leaders in Payments and Fintech podcast brought to you by Edgar, Dunn and Company, the global payments consultancy company. Well, thank you very much. We're coming from the City of London today. I'm your host, Mark Beresford, Director and Head of the Retail Payments Practice at Edgar Dunn. This podcast series is a series of interviews with different leaders across the financial services industry and taking a look at what it takes to bridge the gap between strategy and execution in this highly regulated sector. In this particular episode today, I'm very delighted to be joined by two guests from Worldline and Samee, Zafar, our CEO. And the topic today is stablecoin and central bank digital currencies, CBDCs. And without further ado, let me introduce the speakers and maybe kick off, talk about your role and at Worldline and context within stablecoin.
Thank you, Mark, for the introduction. Diederick Langstraat, I'm part of a business development team within Worldline, international team. And as you can imagine, Worldline is one of the biggest processors in Europe. And it's very relevant to see how the market develops, but also act on it and how we can play a role and as a technology provider and a processor. And I'm part of, let's say, the more on the front end of the conversations we have with the banks and central institutions.
Thank you, Diederick, and thank you for joining us today. And Thibault, your colleague.
So I'm glad to be here. Thanks for the invitation. So I'm Thibault Pelé. I'm the global head of digital currency for Worldline. I'm looking at all the topics regarding a bit of the new payment means with the stablecoin, of course, with the CBDC. I was heavily involved in the digital euro, in the different working groups, and I'm working both on the strategy side and also on the product side to build the right solution for our clients.
Thank you, Thibault. Great to meet you again, and thank you for joining us. And Samee, our very own CEO for Edgar, Dunn and Company.
I lead fintech in the company, and we have worked on several projects ranging from startups all the way to the big tech all across the world. So, always with an angle of payments or some people call value transfer. So I think all these new things, these innovations like stablecoins and CBDCs and stuff, we have a good handle on that one. And it's just very interesting to see how this whole thing evolves.
Maybe we'll start with Samee, just to set the scene in terms of defining what they are, the relationship with stablecoins and CBDCs, and also how do they differ to crypto? Maybe start with that.
Crypto, basically, they're different. People define things differently, but crypto really means currencies that are currencies or tokens that are decentralized, and therefore they need an open ledger, often referred to as blockchain, to keep record of transactions. And there's the decentralized distributed system actually approves transactions democratically rather than a transaction being approved and authorized centrally, like it happens for many systems today. So that's crypto. So Bitcoin, we know as the main example of crypto. Then CBDCs, to my mind, were really the central bank's response to crypto, because crypto actually has the potential of bypassing central banks completely, because the value of crypto is based on the rules of demand and supply, and you don't need a central authority. So by definition, you don't need a guy in the middle regulating it, issuing it, monitoring it. So central banks came up with their own digital currency. Central banks in some countries have been able to issue really on a pilot basis or on very specific areas, but it is just being investigated. Some people say that it's really a solution trying to find a problem to solve, but it's just way before we have seen any real life practical applications. And finally, stable coins are actually something very interesting. They are sort of developed as a response to the volatility of crypto. As we know, Bitcoin has gone up and down like crazy. I wish I'd bought some Bitcoin when I was talking against it many years ago. And I said, nobody's going to buy it at $300. That is just ridiculous. I just got $100,000. So it's just unbelievable. So that volatility is solved by stable coins, because stable coins are not linked to the forces of demand and supply, but they are linked to something more concrete. So usually the most common ones are linked to actual currencies like dollars, but you can have stable coins linked to other forms of assets, whatever they may be. But the idea is to regulate the fluctuation in value.
So they're fiat pegged tokens.
Yeah, they're fiat pegged. Those are the common ones, like Tether and USDC. They are the most popular ones, but they can be stable coins pegged to any asset.
And our colleagues at Worldline, what in terms of setting the scene, how would you set the scene for stablecoins?
So basically, what I would add to that is, what you currently see. It's a market really evolving, still in movement, not settled. And what will happen with the full implementation of MiCA? Will there be consolidations? And for us, it's very important to not only follow, but also act to it. It will really fundamentally change the payment ecosystem. It's already changing. So it's very important, we as a Worldline, to be on top of that. But it's exciting.
MiCA, just for the audience, is the European regulation, is that correct?
Yes, that is. Yeah.
And so that sets a framework, a regulatory framework in which stablecoins can be issued. Is it the equivalent is Genius Act in the US? Is that correct?
Yes.
Yeah, basically that's what I wanted to say. It's very important. We need to follow, not only follow, also how can we as a company be part, as one of the largest processors, act on these developments. On the one hand, we are involved in digital currencies, but if you go back to stablecoins, how can we somehow streamline or tap into in those kind of developments?
I think the bulk of this podcast, we want to get into the use cases and how do they actually, in the real world, what does stablecoins, what do they solve today that traditional banks, traditional bank rails don't resolve, don't solve? What is it doing?
Yeah, maybe on this one I can answer. To understand the use cases behind the stablecoin, I believe it's also important to understand the technology behind the stablecoin, which is the blockchain, actually. So this blockchain, it is what we call a DLT, distributed ledger technology, and the distributed component is very important to understand the use case behind stablecoin. Because basically the way I like to explain it, hopefully in an easy way, is to say the blockchain is, for me, the international language of IT system. Which means with the blockchain, you enable the IT system to communicate to each other in a trustable environment. And it changes a lot of things, because when you understand that, then you understand why you can connect different systems to the same component, which is the blockchain, and they can share information, they can access to information, just like a shared database, but in a trustable way. Which means, especially for the stablecoin, then it means that it will reduce the number of intermediaries, because currently a lot of the systems that we have, especially in the payment, they are relying on different connections. So system A is connected to system B, which is connected to system C, etc., etc. So with the stablecoin, leveraging the blockchain, all the systems are natively interoperable. So for the stablecoin, you reduce the number of intermediaries. So of course, you bring some new benefits, whether it's on the pure cost side. Currently, we can make transaction on the blockchain. So it depends on which type of blockchain, but on some blockchain, you can make transaction for less than 1 cent, for instance. And also you can make it completely almost instant. So the time for the validation, but less than a second, we could say. So it means it enables lower cost, but also direct settlements. So in terms of use cases, it opens a lot of possibilities. For instance, the cross-border. The cross-border is maybe one of the most that the industry has been looking at, is really to tackle this issue. How can I ensure to have a currency, a money, that I can use in the international system and that I can use to send to my kids, for instance, when they are studying abroad? When in that manner, currently it is possible. You have a lot of solutions, the Western Union, etc. But it costs a lot because there was a lot of intermediaries. But with the stablecoin, it costs a lot less and it is instant. And it's also way easier to access to the money. For instance, if my kids are studying abroad, for instance, in a country where they use dollars, when now I can very easily access to the dollar as living in Europe. I'm just going to my wallet, I'm buying some dollars, so some stablecoin dollars, and I can send it already to my kids. So that's really a new way, I would say, a new paradigm that is being created by the stablecoin, because you have access to a digital currency on a new technology, which is natively interoperable.
Now, maybe to add to that, so if you're looking at business case, so a wide range of use case, we'll take some other examples later on, is that if you go business to business, it's quite, you see already, let's say, business cases evolve quite quickly. And certainly, if you're talking about cross-border, it's a very clear business case to take this by the hand. You see all the developments also on the consumer side. Another way of structuring, looking, if also compare this to, for instance, a card transaction, there are multiple, let's say, process steps which you can diminish. And that makes it very interesting in this whole development. But it needs to come together, right? So where can you consolidate on the different use cases or the different services which are already being offered by stablecoin?
And let's build on that, Samee, maybe on the cross-border. Is there, because it's dollar-linked, or potentially dollar-linked stablecoin, is it addressing some of the high inflation countries like that we've seen in Nigeria and other countries, because it's stable and linked, pegged to the dollar? Is that lend itself more to cross-border types of payments?
I'm not sure about that, because each country will issue their own, stablecoin or CBDC that is linked to their currency. So in the UAE, you have the, it'll be linked to the local dirhams and dinars. I mean, the UK government is inviting consultation right now on stablecoins, and they're looking at 3 use cases. So I think you've already mentioned all 3. So number 1 is retail. Number 2 is remittances. And number 3 is B2B for trade. They're inviting people's views on those. But on cross-border, the dynamics of remittances are very different from dynamics of trade payments, which are large payments to manufacturers, to suppliers and stuff. There's the criticism there is that, yes, that's a very clear use case. But currently, you can send remittances to most countries in as quickly as in 5 minutes, literally in 5 minutes, because companies have liquidity now on both sides. So they have linkages with beneficiary banks. So as soon, you've taken one of the app-based companies over here, you want to send money to India, let's say. It's guaranteed in half an hour, but usually it gets there in your bank account or in your beneficiary's bank account in 5 minutes, So the use case will struggle in the sense that what is it going to provide? Is it providing something cheaper? Is it providing something easier? Right now it is not, because it's very easy to send the money. And if it's above a certain amount, let's say $200-300, it's usually provided free because the companies take a little bit of cut on the foreign exchange. So while these are clear use cases, we will have to come up with very clear value proposition, which will help us compete with the incumbent methods and incumbent payment providers. If you see what I mean, because people just don't move just because there is a better technology out there, particularly when it doesn't have liquidity. Whenever there's a new payment system, it doesn't have liquidity. So I think those are the things that will need to be solved before the use case becomes more attractive from a pragmatic point of view.
But Samee, do you see stablecoin as being a new set of rails?
You could call it a new set of rails, but right now, quite honestly, stablecoins are popular with people who want to get into crypto, but don't want to get the volatility of crypto. And it's easy to do an on-ramp and off-ramp with crypto, because with crypto, if you do an on-ramp and off-ramp with fiat currency, you have lots of regulatory issues, particularly when you're off-ramping, because they need to know where did you get the crypto from. And particularly many of the banks in most parts of the world actually don't look at it very lightly. So that's what it is happening right now. That's why even people are even paying a little premium for stablecoins. So if you have, let's say, you're buying a stablecoin that is pegged to $1, one coin per $1, people are paying $1.02 for it. Although the value is just $1 because they want to get into crypto. It really has a long way to go, but it's a very interesting new innovation because it's not volatile. It actually rides on the digital currency or crypto rails, if you want to call those.
Yeah, maybe to add to that, Samee, I think it needs to evolve. And what I also see there are a lot of initiatives going on besides stablecoin, like a more traditional approach, like Nexus Global Payments, which basically wants to connect instant payments networks worldwide. So that's also interesting how that all develops together and which one is going to win, or how many different players will be, let's say, be next to each other, which is an interesting.
I think that's a very interesting point because you have regional networks, right? So you have PAPS coming up in Africa, which is connecting 52 African countries. You have Buna in the Gulf. You, of course, have the Target system over here. So the initiatives like Nexus are trying to link up those regional systems or even countries to regional systems. But it is an innovation on what we call the correspondent banking model. It is still an innovation on that. But even the correspondent banking model can improve by using tokens, which will. So that means that there could be a hybrid developing in the future that uses the correspondent banking model, but at the same time uses the crypto or the stablecoin technology.
Is there an angle around agentic? I mean, a lot of people are talking about agentic commerce. And is there an angle that stablecoin could lend itself to agentic commerce?
I believe it, and not actually to use all the buzzwords currently in this industry, but truly because for me it would make sense. The agentic commerce, when you look at it at the end, it is new interfaces. I mean, usually before you went to a POS to buy some stuff, then you have the e-commerce, so you could do that through a website or also through an app on your phone. And now you can do this directly in ChatGPT, for instance. You open ChatGPT, you are looking for something. I want to buy a new shoes, for instance, and you will be able to do it directly in ChatGPT. So it is a new interfaces, and it requires the system to adapt to understand all those agents are communicating. Remember, once again, we are trying to connect different systems together. When you understand that, of course, for me, the stablecoin, they have a role to play because behind the stablecoin, this is an infrastructure. This is, we could say, to simplify again, but a new rail, a new payment mean that would fit well with the need of agentic. I will just give some examples, but for instance, two actually. For instance, on the agentic, so the agent is doing the payment for you. So which means you need to delegate the payment to an agent, and you need to delegate an authorization, and you need to delegate your identity sometime to the agent. The thing is that precisely with a stablecoin, for instance, you could use a stablecoin to do it with a technology that we name the self-sovereign identity. So you could decide to disclose some of your information, and you remain in control of your data, of course, and to delegate some of your identity information to the agent. And very easily, actually, because of the underlying technology, because this is a more recent rail, let's say, the stablecoin. And the second use case is the machine to machine. So at the end, it's agent talking to agent. So machine talking to machine. Well, with the stablecoin, you could leverage also the smart contract capacity from the blockchain. So you could say, okay, I will create some smart contract that will enable the payment under some conditions that will be triggered only by some agent that has been authorized before. So you see, I really see a link, not again, just in the marketing, say, okay, we will do all the buzzword together, but really because there is on some place, some interfaces, some new interfaces, and on the other places, there is a rail, an infrastructure, which is maybe better suited for that, or already suited for that. So I really see the synergies, and I believe in the future, these synergies will be studied more and more. I know some players are already looking at it Coinbase, for instance, they have developed some protocols, etc. around that, X402, for instance. So I think we are only at the beginning, but I'm very interested to see what's going on in the next years on that.
I think we are at the beginning of agentic commerce, but I think the ultimate goal is agent to agent. And so what I think you're saying is where it's agent to agent transactions, then stablecoin might be the preferred payment method because of the authentication, the credit, the credentials that are already established. Okay.
Exactly.
Are there other real world assets, like, for example, real estate? I read quite a lot on that, where these real world assets that are off chain can be programmed, so to speak, into the stablecoin. Is that another use case that might be of interest?
I know. I can. My perspective, yes, definitely, especially so on the financial side, where we see more and more financial assets being tokenized. We've seen, I think it was even 2 days ago, there was an announcement from someone in the US in the financial market who stated that 100% of the assets should be tokenized. At the end, tokenization, it's nothing more than creating a representation of the asset, but bring it on what you call on-chain. So create this representation on the blockchain, but which means at the end, when you have the assets on the blockchain, you need to have a way to settle the asset for the payment. And this was in a report from the ESMA, so the European Securities Market Authority, who said there is currently an issue in the market, is that there is more and more players willing to tokenize their assets, so bring their assets, so their real world assets on the blockchain. But the issue is that there is no good way to pay for those assets. So to bring what you call the cash leg, to be clear. So yes, there is definitely traction on this. As mentioned before with the stable, etc. The tokenization brings some benefits. You reduce the number of intermediaries. It is open 24/7, 7/7. You bring the programmability layer on top of this. So yeah, on my side, let's see for the others, but I really see benefit from it.
Samee, any thoughts on?
Yeah, I mean, you can back it with anything. I think in the MiCA regulation, you have these asset-backed or asset-referenced tokens. So, you could have art, for example. You could have expensive collectibles that are backing something. Just like in crypto, you have so many now variations. For example, you have meme coins, right? The meme coins are almost like meaningless, but just people just buy them because they like to collect. We used to have these NRFs or NRTs or whatever. There was
NFTs.
NFTs. That's right. Yes,
this was non-fungible.
There was a lot of buzz around those a few years ago. So there could be many variations, but they don't have to be fully backed by fiat. But I think the ones that will be used are the ones that will be backed by fiat, or they could. Some stablecoins are even backed by algorithms because they use different. They don't have to have all fiat. They could have a mechanism built to keep the value stable. So you could have a mixed portfolio of assets that are backing it, including fiat. So there could be many innovations coming there.
Before I I'm just conscious of time, before I bring the podcast to a close, I want to sort of go around the table and ask each of you, what is the outlook? And the outlook is, what to expect when, is it really consumer payments? Is it B2B settlement? Is it machine to machine or agent to agent? Where is it going to happen the biggest growth? And then secondly, what would be the advice that you would give to banks and merchants who are looking at stablecoin, in their own business plans?
You see now a lot of providers coming up. We have talks with many, multiple parties. I expect there will be a lot of consolidation coming up. There will be, let's say, a lot of stablecoin propositions have sort of the same. So they need to consolidate. And I think, and if you also talk about, what's our advice towards the banks? I think it's very important that they also, let's say, work together, which is already currently taking place, but more in a more bigger extent, to get also the acceptance. I mean, in the end, it's all about, certainly when you talk about retail and consumers, it's about acceptance. So you need to have the skill And the scale is only possible if everybody is agreeing that we're going that path to go. And the other thing which I'm very interested in, and not sure how that will develop, how is the integration with existing payment systems? Will there be? Or is it just staying it on their own and it will be replacement? I'm very curious about those kind of developments.
Okay, that's very interesting. Thank you, Diederick. Thibault, what are your outlooks for stablecoin?
No, I very much agree to what Diederick said. It's not a replacement, it's complementary, and I believe also in experimentation, both for the banks, of course, but also for the merchants, because the stablecoin are very promising, but still yet they need to find their place in the industry. I believe more and more this is the case, but it's still very marginal, especially in Europe. So I would really suggest to have more experimentation. And for me, what is very critical is the transparency. And what I mean by transparency is that the technology should not be a burden. And currently this is the case. I see it as a burden because you don't have account, you have wallet, because you have on-ramp and off-ramp, which means how you convert fiat to stablecoin and stablecoin to fiat. So those are some heavy terms, to say the least, and which are complicated at the end for everyone, for the consumers, for the merchant, for the banks. And that's where there is really something to do. And I believe the banks, for instance, should really work on how they can make this technology transparent, upgrading their system while keeping this transparency. You don't talk about wallet address, but you talk about IBAN, for instance, and those type of things. And that's where they should also really work in some consortium with partners, just like Worldline, of course. I mean, this is our role, but also with issuers and other banks, because we don't want to see on the market some fragmentation because there is too many stablecoin issuers, etc. At the end, keep in mind, if you look at the consumers, if you look at the merchants, we need transparency, and transparency means easy to use, to abstract the complexity, but also to not have 20 different stablecoin or 20 different tokens on the market, and to have just, you have stablecoin, they are regulated, you know how to use them, and you don't want to see, okay, I want to use the stablecoin of Odo, the stablecoin of Circle, the stablecoin of Société Générale. This is too complex, and this is where I believe what is missing currently in the market, this layer of abstraction.
Okay, all right. Thank you very much. That's well said. And Samee, what's your outlook?
Yeah, I mean, I think stablecoins could find application in all the use cases that we discussed so far, provided there is a value proposition to be complementary or to provide specific use cases within the current flow of payments that we are familiar with. But in the short term, maybe they will find applications, specifically digital payments. So, for example, e-gaming, where your gamers may be in multiple countries and they are interacting with each other, or they could be in-app payments. So you're playing Fortnite and you want to buy something with a fractional, a few cents, or it could be $1 or $5 or whatever, but you may be playing again with people in different countries. For people who are offering games like that, stablecoins might actually provide them with a more convenient currency that everybody can use and pay. Could even be in social commerce. So, for example, when you go to a social platform, they have storefronts there. You buy things from there, or you put a picture in a search engine, it finds your product. So I think in these specific digital use cases that involve cross-border payments, perhaps the ones that people should be looking at first.
Thank you, Samee. That's really good. Let me summarize some of your takeaways. I think it was said it was definitely going to be some consolidation in the market. We want to avoid fragmentation. The technology is proven. It's there. It exists. There's many use cases, I think we've heard, for stablecoins, particularly cross-border. And micropayments might be the area, small micropayments, such as in social media, social commerce. So what I'd like to do is bring the podcast to a close. I'd like to thank our guests. I really appreciate you listening today to today's podcast, brought to you by Edgar, Dunn and Company. Please subscribe to Apple, Spotify, or your preferred podcast platform of your choice to hear more and other episodes. But thank you very much for your time today. Thank you.
Thank you
very much.
Thank you. It was a pleasure.